or has something to do with the economy, right? The CPI, Customer Price Index, right, indicates inflation trends, right? Interest rates. So your interest rates are controlled by the central banks. It impacts borrowing money and the strength of the currency. And I like to break the interest rates down as well. Is your interest rates usually are at 4%, 7% on your mortgage, right? Or you can get 4 to 7% interest on your money, right? On returns. So just think about it on both aspects when they're talking about interest rates. But that, has something to do with either returns or the borrowing of the market. And that makes the actual economy move is the actual interest rates. So NFP is non-farm payroll, right? Major employment reports, right, affecting market volatility. So breaking down non-farm payroll, right? So there's going to be a lot of influx in farms coming up, right? There's a lot of people, starting their own at-home farms, right? And that's key. That's key right there. So that right there, people starting their own farms is going to actually affect that portion of the economic calendar. Reports, including unemployment rates and job growth metrics, right? How economic data affects forex and stocks. Forex market strong data currencies, weak data currencies, right? So it's gonna affect that as well. So when one currency is in that aspect, the market is gonna go up or down, right? Interest rates hiking, right? Currency appreciation, stock market, positive data, market optimizing and buying, right? Negative data, right? Negative data, market sell-offs, right? That's what happens when the market sells off, right? There's a lot of sellers in the market, or a lot of bears in the market, right? Influence, and inflation concerns impact on corporate earnings, right? So interpreting the economic calendars for trading, right? Understanding an economic calendar, right? So you got to understand the high, the medium, the low impact when it comes to it. You got to look at the key details, time release, right? The time release on these actual news headings are key. The reason being, right? Because once you actually get into you want before you get into the markets, you want to see if there's any news happening, if there's any economical news. And the reason being is if it's high impact, as a beginner trader, you may not know how to enter the markets at that high volatility. So to avoid unexpected volatility, you want to at least wait an hour before, after the news actually hits. Prime example, right? So if there's a news heading that comes in at 8:30, right? And you don't want to trade that, you don't want to get the high volatility because you're a new trader and you don't want to blow your account and you don't know if you're getting on a good entry, right? Because the market really does a lot of manipulating and a lot of manipulation around the news headings, right? The brokers can spike some way and the spread can jump. There's multiple factors that factor in why beginner traders really shouldn't trade around the news. But if you have all your odds stacked in your favor, right? Because that's what we do. We stack all the odds in our favor, meaning that we're gonna win. We just have to actually check off different check marks to our trade plans, right? So, live data analysts analyzing practices, right? You want to analyze real time and past time economic data, right? You want to compare forecast versus actual figures, right? Because you're going to have something that says a forecast. The forecast is going to be, what they think the market is going to do, right? It may say that inflation is going to, or the interest rates are going to stay at 4.50, but President Trump might want to drop them a little bit lower or make them a little bit higher. So you really just have to pay attention to that because what they actually forecast might not be what it actually comes out to be. So and that actually affects the markets, and it actually something called creating a spread in the investment industry, right? So discuss market reactions and potential trade setups, right? Homework assignment. We always like to end these slides with a homework assignment, right? So write down the homework assignment and make sure you get the homework assignment done. Whether that, and I'm gonna actually, what I'm gonna show you next is gonna actually tie into how you can actually do this homework assignment, right? So make sure you copy this down, screenshot this information, so you can do the homework assignment. All right, all right. So we just got finished talking about the economical indicators, right? The news. So this is the tool that we use, and it's called Forex Factory, right? Everybody has access to Forex Factory. Um, but you just to actually do a little tutorial on Forex Factory, what I just went over was the economical folders. These are called what they call files or folders, right? We got the yellow with low impact, we got the red for the high impact, and we got the orange for the medium impact, right? So, and then as you can see, we have a certain time when this actually plays out, right? And how do you know what one you're on? Or where we're at currently, you see this little green arrow right here. This tells us that we're actually on this economical data right here, which is this yellow folder, which is low impact, right? So, but as you can see, there's yellow impact down here, orange impact a little bit right here. So the JPYs and things like that will more than likely be active more along around this line, right? But then you also have something called, right? We have something called the um, well, first of all, we got currency pairs. The currency pairs are the currency versus another currency, right? So it really it's this many traders buying USD JPY, right? It's this many traders, 52% is selling USD JPY. So keep that in mind as a good tool as well to see, who's actually buying the US dollar and who's actually selling the US dollar. But also what I like to see is, we go over sessions, different sessions inside, this economic calendar. So the session that we're on right now is Sydney, Tokyo, right? And it also says Australian bank holiday, meaning the AUDs, right? The AUD pairs, there's a holiday on the AUDs, right? So it's going to be low volatility on those because when the banks are normally closed, there's not much movement going on, right? Little movement, but not much movement. So you really want to stay out of the market when the banks are closed because, just like I said, it's volatility, it's manipulation. They can pretty much do what they want to do when the banks are closed. So, but then it lights up right here green, and lighting up right here green is key, right? Because it tells you you're in a Tokyo session, meaning JPYs and the GBPs should be activating soon, right? They should be moving with some volatility, right? Awesome, awesome. So, awesome, awesome. So, yeah, so what you want to do is use this tool before you actually hop in a trade, right? Make sure there's no actually news happening, and don't hop in, or hop in because there is news happening. So, and I will go over some things when it comes to the chart because it's going to actually have these actual symbols on the chart as well. So let's go on over to. All right. So if you're familiar with currency pairs, and this is, not your first rodeo, put what currency pair you want to take a look at. And we're going to be looking at support and resistance. We're going to be looking at support and resistance zones. We're going to be looking at different patterns in the market to the reason why we would enter that trade and what we would actually do, right? So this is currently gold, right? So we can currently look at gold, and I'll show you how I find my higher high and lower low, or what we like to call support and resistance zones, right? Because once you find proper support and resistance zones, you're going to actually be able to see, the actual zones resist or it bounce off of support, right? So we got something called the top-down analysis, right? So the top-down analysis means we go from the higher time frame, which these are called time frames on the side right here. So each candle on this is an hour time frame. So each candle is an hour, right? Each of these candles is an hour. It doesn't matter how long it is, how tall it is. It does, but each candle is still considered hour, whether it's short or tall, right? So keep that in mind. But we're on the hour, but we're gonna clear all our drawings so we don't get confused. We're going to go to the daily, right? Because I like to look at the daily. And as you see, previous day was a crazy buy, right? Previous day was crazy buy. It's above previous high, right? Because I normally like to go previous high, previous low, right? Just to find a higher high and lower low of the previous. But now we can see what it's doing above this line, right? That could be like a break and retest, right? On a long-term form. So we're gonna go see what it's gonna be doing. So each of these candles are 1 day, right? And this one was a pretty much a pretty long day candle, right? This was a short day candle, right? But all in all, all these candles are 1 day candles. So that's how I like to find my support, right? Support. And then we have resistance. All right, support and resistance. So normally this is what happens between support and resistance. It bounces off of resistance, comes back down to support, right? Bounces off of support, right? Comes back down to resistance. But there's a time where it may break support, right? It may break support. After it breaks support, right? Once price breaks support, right? That becomes resistance now, right? Because that's the top. So now that becomes resistance. So it may come back, touch that resistance, and then, continue down. So that's called the break and retest method, right? That's when, that's when you have a higher high and lower low, meaning a support or resistance, and it breaks out of that support or resistance and makes a new high or a new low, right? And that will be your entry for the sell, right? But then it may break above, right? And if it breaks above, we're waiting for it to come back down to the zone, right? And buy. So, but we're gonna go and see what this red candle right here is doing inside that red candle. So I like to go to the hour, see what it's doing on the hour. Zoom out. Okay, so possibly sitting above this 1 hour, right? We're gonna see if it's gonna be playing around with its zone. But I also like to see what it's actually doing on a smaller time frame as well on top of that zone. Is it making a W? Is it making an M? We're gonna go look a little deeper. So when you actually go to a smaller time frame, that smaller time frame, you're gonna see a lot more movement. You're gonna see a lot more patterns, right? So as you can see, it made a gap. And during that gap, it has to fill that gap. So gonna get our little tools over here. And these tools you can use, these tools are good for extra confirmations and stuff like that before you actually enter a trade as well. So get familiar with the tools as well. So this right here gapped up. So I'm pretty sure that this right here gapped up when the market opened back up, because what happens is what happens is this right here actually um gold actually closes, right? It closes, so it closes for like an hour, right? And after that hour opens back up, normally it has a gap or a strong move above because of the force of the buyers. This is the force of the bulls coming into play, right? All right. So let's see what type of currency pairs everybody is putting in the chat. Okay, GU. All right, that's different. EU, USD, JPY. Awesome, awesome. So pull those up, and just like I say, if you know what currency pairs are, if you are familiar with Forex, drop some currency pairs inside the chat. We're gonna go take a look see at them, right? So, knowing that this is currently in a uptrend, but it did a M on the 5 minute. See, look at this M right here. As I said, we're going to be looking at different formation patterns. So, M's and W's is what we're looking at. This right here is considered a M, right? But this right here also could just be considered a retracement, right? Retracement just to fill up that gap for the buy, right? So we're gonna come back to that one, and we're gonna go to EU. EU is the most highest traded currency pair. It's everybody's go-to. So what we see on here, let's go to the daily. Let's try to find some zones. All right, so previous day. So I like to look at the previous day, see what the previous day is doing. Higher high, lower low, right? So those are my zones, support and resistance, right? We got resistance. We got support. Support down here. All right, so, and this is one day. So this one day right here, it looks like it's just gonna be pulling back down. Could pull back down here. But it looks like it's pulling down here, just about right here. So we're gonna go to a smaller time frame to see what it's gonna do. All right. So yeah, we're gonna go to the hour, and the hour is looking like a drop off of the zone. See, sell from this zone, sell from this zone, then we got another touch right here, right? So keep your eye on that. The hour, it is dropping on the hour. So I wanted to show y'all the economic calendar on your actual trading view as well. So this is called trading view, where we mark up the charts. We look to see what the market is doing before you hop in, right? But then, all right, so it says building permits, right? Housing starts. So these are the certain things that's going to be happening in the news, right? And then right here we have Euro, ECB press conference. We got the ECB interest rate decision. So these have upcoming red folders, right? And you can see that directly on here, right? So keep that in mind, that you can actually find those on here as well. So we're gonna look on a smaller time frame to see what it's doing. So it's looking like retracement sell from a buy that it's been doing all day pretty much. So it's been pretty much buying all day. So could potentially be doing a retracement. So come back to that one. USD JPY. All right, so USD JPY. So we just looked at, and yeah, so these look like they're pretty much doing the exact opposite, right? We're gonna look down here, see if anything is. So we got a gap right here. I like to look to see where there's an imbalance in the market, and the imbalances in the market are normally where the gaps are. And that gap is normally imbalanced because just like we saw on gold, it had to fill that gap before it actually um, continued or went where it's supposed to go, right? So potential gap fill right here. And the reason why I say it's a gap, because we have a wick right here, then we have a long candle. So that long candle created a gap to where, if there was a wick that came down here, right? If there was a wick that came down here, then we would say that that would have been a filled gap, right? But the wick didn't come down here yet, so potentially couldn't go. Probably could fill that gap a little bit later. Not currently. So, all right. So let's go to first clear out this. Then we're gonna go to higher high, lower low of the daily. Okay. So this daily was a sell today. As I said, these things could just be about to retrace and do its thing. So the hour. Yep, potential is selling, but this could be the buy for retracement. All right, so how you would actually set up these trades, right? If you were to enter in right now, we would enter in for a buy, right? And reason being, because I see multiple rejections right here at this zone that we marked. So let me show you. We got these right here. These are rejections on the zone, right? And then we have potential shoulder right here. Potential shoulder right there. And see what we were talking about with the W's, right? The W formation right here. That's considered a small W, right? This right here is considered a W. All right. On a larger scale. So the next thing that it happens was be the pullback and then the buy. All right. So we would do a sell by market on this one. Oh, that's a buy. See. So we're gonna go short, and we're gonna put our stop loss at 15 pip stop loss, and we selling. sell by market. We're going to do a, see how many pips we're going to do. We're going to do a 15 pip stop loss TP as well. So we are risking 15 pips to get 15 pips, right? So this is your risk to reward ratio. So we're going to do that, and let me show you how to put the entries in. Sell by market at all right. You should be in profit on that trade as well. So you can secure your profits by either taking your profits or waiting until we finish putting in the trade. We're going to do TP at stop loss at 3913. All right, so that's our order right there, right? Or our trade, because we're doing a sell by market, which means you're getting into it right now at that price, right? We're already down up. We're already up 3+ pips, right? So we got it at 15 pips. We're gonna get it in at 15 pips, okay? And that's normal for it to be playing around with your entry. So we're gonna go to see what and gold does what it wants to do. So you gotta just pretty much just want to trade what you see, right? Okay. So gold, we're gonna do sell by market, right? Sell by market, meaning we're hitting sell right now. We're gonna go short, right? We're gonna do a tight stop loss on gold because you can lose a lot of money if you don't put a tight stop loss. So we're gonna put our stop loss at right here. I'm gonna give you the specs for it. Sell by market. Sell. I'm gonna do TP at. All right, we got stop loss at 3350 56. All right, so that's our order for gold, right? And let's go back to USD JPY, right? USD JPY. We're gonna do buy by market, right? And we're gonna look at some more JPYs. So normally the JPYs do the same thing. So we can get a signal in for that as well. So we're gonna go long on this one. We went short on the other ones. So if you enter that trade, you should be in profit as well for the market execution. So we're gonna do a 25 pip loss, right? Your lesson, 25 pip lesson. 27 pip lesson. And we're gonna do 28 pips, and TPs, right? So we're gonna go to buy market. Then we're gonna go 142, 400. All right, we got stop loss at 142, 134. Then we got TP, at 142, 689. All right, so signal for that. See what that's gonna do. All right. So, and look, you see this is pretty much doing the same thing that the other JPY is doing. Pretty much doing a inverted. So we know that this is right here is considered the head, right? This right here is considered the shoulder. So we're looking for that. Looking for that to happen. All right. Let's see. Yep, see, doing pretty much the same thing. So this right here look like it's about to do a W, right? Like a W formation happening right here at that zone, right? So just looking at the different patterns in the market, it's an M right here. See how that M right there could have caught you all of that down there, entering right here. Or you could have seen the three rejections right here. Got in on the third rejection to take that all the way down, right? So zoom out, what do you see? Right here we see a inverted, right here we see an inverted head and shoulders pattern. Where do you see that at, right? Inverted head and shoulders right here. Just the head right here, shoulder right here, inverted head and shoulders. So, all right, so you should be up on your JPY pairs, your USD JPY. You should be up on your, let's see, your gold pair as well. There you go. So you should be up on your gold pair as well. Yep. So this right here never reached your stop loss. So you should be in the blues right now. And what I also like to see, how I knew it was going to be going into a sell, is I got something I like to call this something called the stairwell, right? I like to call this the stairway, right? Because this stairway is going down, right? Hold up. That's why I like to click that, erase it. All right. All right, so the stairway, we got this going down, right? That's one step. That makes the next step, right? This right here going down is the next step, right? That's the top of the next step. Right here is going to go down, right? And what's going to make the next step is going to be the next low down here, right? Which should look like that. So you up on that gold trade so you can secure your profits, right? You can secure your profits by taking your profit or holding until TP. Also, what you can do is move your stop loss or to stop profit, or what we like to call the trailing stop, right? So good stuff, right? Should be up on Euro USD as well. Yes, you're up on Euro USD as well. Let's see how many pips. 5 pips on Euro USD sell by market. And yeah, see how those rock out for the rest of the class. Okay, awesome. All right, we have another pair. Awesome. NZD USD. Oops. And see, it's pretty much doing the same thing Euro's doing, right? So a lot of the pairs are going to be doing similar, right? Are going to be doing similar to what the other pairs are doing, right? So this would be another sell by market, right? And you to set your stipulations on here, your specs on here, right? So we want to go long, right? Or no, we're going to go short. So you're going to make sure we're entering in the right trade. We're going to go short. Say we did a market execution right now, right? Right here, you calculate how much you want to lose, right? You always want to calculate how much you want to lose, because in trading, it's never guaranteed, but we do stack our odds in our favor, right? Or we stack our odds in our favor and not the market's favor. So we could do a 15 pip stop loss, right? Do a 15 pip stop loss. Pretty far away. Versus, right? We can stretch it out to 20 pips, 20 pip profit, right? So that's how you would actually calculate that. NZD USD, right? And if you look at NZD USD as well, it is pretty much a head and shoulders pattern, right? So head and shoulders, it's a head right here. So it's an M, right? That's considered an M formation right there, an M pattern, right? And this right here is just retracement. Just a retracement, can retrace up to this zone right here, or it can retrace up to this zone right here, right? Because those are potential shoulders, right? Those are potential shoulders. Potential shoulders, these two lines. All right. But we're gonna go, let's look at it as the higher high and lower lows. Should we just erase these really quick? Higher high and lower low of the previous day. So start with that. All right. Then we go to the hour.